So we've got an interesting week this week. FOMC minutes come out at 2 o'clock. We've got, what is it, jobless claims on Wednesday. The FOMC minutes comes out at 2 o'clock tomorrow. Today is Tuesday. We've got Thanksgiving on Thursday. Happy early Thanksgiving to everybody. I hope you guys get to enjoy some time. Spend some time with your family. And get some ham, turkey, some mac and cheese, all the good stuff. Hope you guys have a wonderful Thanksgiving. And then Friday we have a half day. So basically this week, all this is good for this week based on what comes out in the minutes is just going to be premium burning. That's pretty much all it's going to be. It's just premium burned. That's about it. That's about how I'm playing it. So on my chart, we've got SPY locked and loaded. We've got our supports here, resistance here, and we are just range bound. And we have been for the last 6-7 days of trading. So if it's going to continue to do that and trade within the range, that makes life very easy, especially for bracketing covered calls and covered puts. And I know some of you all trade ranges on the day trading and swing trading side of the aisle, mostly day traded. So that's going to be convenient, especially if we're just chopping back and forth. I mean, these past couple of days have been nothing but, a premium burn for the covered call, covered put side of the aisle. We've seen pretty decent volatility within this range. It's not a small range per se, but definitely trade availability within it. And I had a question about TQQ this morning before I started. So next support that I'm looking at is I've got an alert at 20.5, but a nice technical support would be 21, right around there. And for covered puts specifically, I got into some yesterday because I cleared all of them and I've been cycling them out like a madman. We've just been trading in this, another relative range here. So, after that pump, cleared them. We dumped down, got them again, pumped again, cleared them. And now we're dropping down again, getting more puts, and then if we fall further, I'll get more. So we're a little elevated right now, as we can see here, from this nice little jump that we saw, about almost 2 weeks ago. And then on SPY, relatively the same thing. So, Riley, did you get those numbers? That's what I'm looking at.
Yeah.
That's what I'm looking at. So we had the similar pump across the market. So TQQ is triple average of the NASDAQ for those who are watching that do not know. That's 3x the QQQ pretty much. And then you've got SQQQ, which is the inverse, triple average. That thing's a lot of fun too. Be careful. It can get spicy. Very spicy. So, we've had a total market pump about a week and a half ago, and we just moved up to the upside, and ever since we've gotten that pump, we've been range bound. So I'm curious to see if FOMC minutes will have anything to do with potentially getting out of that range one way or another. And then we've got Thanksgiving and a half day on Friday. So I mean, I really think that volume's going to be pretty low this week. I'm curious to see what the response is on Wednesday at 2 o'clock to the FOMC minutes. I don't think they're going to tell us anything new or anything that we are not aware of. So I don't know if the reaction will be as volatile as most are expecting. I don't think we're going to get any kind of new news. So from that, we've got covered puts deployed, we've got covered calls deployed. We're bracketed on both sides, protecting both sides up and down. And then I know some of the folks who are day trading in and out, and swing trading in and out throughout the week and day are and have been trading throughout the week this week. So if anybody's got any trades that they want to go over, anything that they're looking at, I'm all ears. Mr. Patel's in here. Good morning, my man. I know you've got some valuable points on the economy, Fed, really pulling the foot off the gas for the interest rates. Maybe. What do we think?
Well, good morning, sir.
Good morning.
I think you brought up some interesting stuff. I was listening. It was good stuff, like premium burns. That's what happened yesterday. We traded. Nothing happened. You could have watched the whole day. Nothing happened. So that was fun.
Well, what are we thinking? What are we thinking on the Fed? What are we thinking? Do you think Jerome Powell's going to take his foot off the gas?
There's data coming out. I believe there's what is it called? Initial jobless claims coming out, right? So I think the average that was on the terminal was like 225. The median, so like they'll have a curve, and the median was 225 would be, estimate. So we'll see what happens from there. There is good news. Cost of shipping containers are back to $2,000. That's a really big difference from 12,000, 20,000 where it used to be.
And what do you
height of the pandemic?
And what do you think about housing prices? What do you think about interest rates, etc.?
It's going to be harder for them to knock value from the appreciation of housing and just the value of an asset in real estate. And I've been doing a lot of reading on this, and this is because the raw materials itself. And that's why, like, something that, let's say you have a piece of land, there's X amount of value on it, right? But then let's say the moment you build something on it, and then it cash flow, now you can have a 5x. So that's the major difference. Is there something built on that real estate? And if there is, then that value, maybe the operating cash flow is down, but because of commodity prices and just the pricing of raw material, you can't knock the value down. You can knock the cash flow down, fine. And the valuation standpoint down. But the hard cost of it, forget about the financial cost of it, but the hard cost of it is what's keeping values up. Which is crazy to think about. But that's because of labor, right? So for you to go replicate that house in 2022 might cost you 3 times as what it cost you back then.
Well, I'm curious to see how long they're going to keep their foot on the gas for interest rates. Sawyer and I were talking about this yesterday. I mean, the longer they keep their foot down, the more the home prices are going to fall and continue to, home sales are going to continue to decrease. So I'm curious.
No, but if you think about it, Clayton, it hasn't decreased by much.
No, I know. Yeah, absolutely.
And like, if you think about it, the drastic move in the rates versus value. I mean, if you think about it, it's like nothing happened.
Well,
Because housing typically lags by 6 to 12 months.
But it's not just housing. He's talking about real estate in general, which we are seeing. Like, our values aren't going crazy, and even on our sides, the commercial assets, because that's because it's just for you to replicate a commercial asset and rebuild it with like American labor right now, it's not viable. That's why the development projects, home builder sentiment is usually a really important number, and that was overshot. So we're not looking that great for outlook-wise for next year, but if you think about it, the real estate market did really good this year. It did. You just have dried up mortgage demand because why? Because the Fed raised rates.
Right.
Of course, that market's going to dry up.
Right. Loud and clear. No, I appreciate that perspective. And what I'm very curious about is post midterms, whether they ease rates or not, what we're going to look like pushing into the final quarter of, or closing the final quarter of 2022. And I'm curious to see what kind of upswing we could see for the big funds to clear their books and, have a couple of check marks at the end of the year and as bad of a market as we've seen. So I'm very curious.
There's a couple of outlooks I've been reading into about what can happen with our end of the year Santa Claus rally everybody's talking about. The main outlook that they're actually looking at is how ugly is Congress going to be, because they have to pass budget every year. So what's that going to look like for this year? And the White House is asking for $50 billion for Ukraine.
Oh, well, they oh my God, don't.
Power shaking.
Okay, well, okay. I was hoping we would be in a place after midterms where the current administration could not spend as much money as they are dishing out and trying to dish out, because I don't know if they realize or not, but we're in a tremendous amount of debt, and we still have very high inflation. So and inflation's created in DC. That's where it's created, and the policies that they're pushing out they're not helping. If they were, we would be, we'd be rapidly, tapering inflation, and we're not. So we had a good month last month. We had multiple months that were went down, went up, went down, went up. Oh, went down a lot. Oh, okay, that's nice. Oh, okay, maybe down a little bit. It's. I understand it's not going to be a straight diagonal line down, but it's difficult for the Fed to do its job when you've got a counterweight on the other side spending a crap load of money, and it's going to create issues for a while. And I was hoping the midterms were going to solve that, but I guess not. So we'll see. But I'm curious to see how we end 2022. And usually, and this is what happened, 1 year ago, we had one heck of a move up, even when we were starting to, the economic warning signs were starting to flash. We had a phenomenal move to the upside to close December and January, so all the big funds can get all the check marks they need on their books, get everything out, squeeze everything out of everything they had, and then shoom, 10%. Gone out of the S&P. See ya. Adios. So I'm curious to see if we'll get any kind of a rally moving into January, so they can they do what they do best, which is prop up their books. So we'll see. That'd be pretty helpful in the short term, but I'm not holding my breath. But I would say that a lot of cash will enter the market, and that's my opinion, but I believe a lot of cash is going to enter the market if we have another month or two prior to the close of 2022 of good CPI data. And if all the other data is in place and it's good for Powell, then it's, we should be moving in the right direction, regardless of what the administration does. Keep my fingers crossed, because I would like everything to get better, and I'd like it to get better quickly, especially for our country as a whole. Because there's a lot of folks that are going into debt, losing possessions, opening up new credit cards that they never had and never wanted. It's just, it's not good. It's not good. It's no fun. So, hopefully we can get everything situated. Mr. Patel, I appreciate your opinion. If there's anybody else who wants to go over anything economic related or any trades or anything, more than welcome to.
So I think just mainly for intraday analysis, like you said, we've been consolidating for the past 10 days. And honestly, it's a higher probability to just assuming that's going to hold as support, because as long as you're above the price level that you currently held, most likely you're going to be profitable, especially if it's with your bias. Now the one day that it does break, you might lose. Now, I don't know what setup it's going to show when it is going to break, but as of today, it does look like we could get a sweep at 398, and that could either be in the morning or afternoon time, targeting it. I see 398 as a level that we go to, and then also 394.50 is plausible. I'm not too sure. I think we'll see that low though.
Yeah, Michael, it would not surprise me if we stayed range bound for the rest of this week. I mean, we really don't have much going on. Again, it's going to be dependent upon if we get any news that we weren't expecting from the minutes, which I doubt we will. But we've got, credit spreads, covered calls, covered puts, selling options this week. Premium's just going to get burned. You give yourself a safe place to sit, and you're good to go. You are good to go. So.
Morning.
Good morning, Savage. How are you?
Good. The question is, what do we typically do around Thanksgiving? That's pretty much history repeats itself. So, if we are stuck trading in that zone that Michael was talking about, so yeah, go with a range there and try to trade it, or just stay out. The premiums are going to get, like you said, big time.
Right. I would go with just logically what makes the most sense rather than me going to Google. But logically what makes the most sense is that volume decreases tremendously. So there's not a whole lot of volatility or movement, which means if there isn't much volatility, we most likely will stay range bound, and we're not going to see a move one way or another. Now, again, we've got jobless claims, a couple economic catalysts tomorrow, so again, that could be null and void very quickly. However, I would say traditionally that volume's low. People don't want to be around their computers, don't want to be at the desk. They want to leave the market. They want to not deal with anything of the sort. So I think that would be.
Honestly, jobless claims coming out is probably going to be the biggest move of the week. Everything else is just going to be bouncing around in that zone.
Yep. I agree.
You can do spreads or whatever, try that out. But I don't know. I kind of typically stay out during this week, and I kind of typically stay out most of the month of December because there's usually they're usually just selling off their shares to take a loss so they can, cover their taxes a little bit. So I usually try to stay out.
Yep. Or, and so, and it's so funny, and Mr. Patel, I'm sure you'll have something to say about this as well. The Santa Claus rally that everybody talks about is a ton of cash being put into the market to raise stock values and stock prices, so that they can do exactly what Savage just said. They can trim off some of the right, and then come January when everybody goes, oh, it's the new year, new me, everything's good. I'm gonna get a gym membership. I'm gonna look great. That's when they unload it.
Remember January 1st last year? It was just like a huge pump all day.
Oh,
Everyone was all excited, and then after that, down.
Yep. That's a total stock market pump and dump.
Yeah.
So, absolutely.
The market manipulators, man. The market manipulators, they got the big bucks and they push the market in whatever direction they want. Usually they push it up, get everybody some hope, and then they dump it on you. And then they buy your shares for cheaper.
That is very well said. I'm with you 100%, and that's why I utilize my strategy, because I don't care whether the market goes up, down, or sideways. Whatever they want to do is fine with me. Don't care. If I got to give my friend that's first name starts with a G, last name starts with an S, won't say it. You guys know who I'm talking about, the big guy, you know what I'm saying? One of those little puppeteers. All right, give him a call, Hey man, what are you doing? No, we're dropping the market. Or pump the market. Or shorten the currency, wink wink. And I don't care. Nope. Now I know you guys care because of the price action movement, etc. And it's good, right? And it's good to follow it and make sure you're not trading against it, you're trading with it. But at the same time, I don't care. It can go up, it can go down, it can go sideways. It really don't matter. It just don't. So that is one of the most important things that it took me a while to learn, because I was so focused on the bullish side of the aisle. You got to be able to make money no matter what. All right. And I was so anti-downside, and I was so anti-pessimism, and I associated negativity with downside. And I'm sitting there going, well, that's stupid. Because if I make money on the downside, that's phenomenal. Because that means I'm making money on the downside while we're not going up. And then when we go up, I make money on the upside while we're not going down. It's just running the whole full cycle. The whole model, the cash flow, everything. So I think it's good not to be messing with options and etc. during major events, unless you're doing straddles, for example. That might be beneficial. But I sell my premium. I let my theta just eat and destroy my contracts, and I just sit back and close everything and make sure you guys are doing okay. Make sure there's no issues.
You see, that's what I try to tell one of my buddies. He's got like 2,000 shares of Tesla, and he's like, "Oh my God, it's going down. I'm losing all kinds of money at home." I'm like, "Why are you not running covered calls on that?" He's like, "Oh, how do you do that?" It's like, "Oh my gosh." And I tried to explain it to him. He's like, oh, that sounds too complicated. I was like, you could have been cash flowing all this downside while Tesla was dumping. Because it'll come back.
If he can,
it's going to take a while for it to come back. But,
Savage, he can run 20 covered calls on Tesla with 2K worth of shares. I mean, that's some serious cash flow. Some serious cash flow. And
You
he,
can sell it buy like 16,000 shares of TQQQ.
this is also true. Shameless plug. This is also true. Well, Savage.
You're running covered calls on that while it's going down and making a little money, so you can buy more shares. And when it goes back up, bam, you got 100, 200, 300 more shares. You know.
Mr. Connections, if he's complaining about Tesla's volatility, we should probably keep him away from that. So,
Hey Savage, just looking at the options chart, you can, or options chain, you can go extremely far out of the money, collect like $50 in premium, for one contract, and then that's per week, times 20. Pretty good.
Yeah.
and that sounds really safe to me. I think let me take a
Is that like $1,000 a week or something like that?
Yep.
Yeah, it's $1,000.
Yeah, 4 G's a month.
Yeah.
Let me okay, hold on 1 second. Okay. Give me 1 second. All right.
So $15 out of the month.
December 2nd. Yeah, I don't see Tesla. I don't see Tesla getting to 195. So that would be $1 a contract. So $1 a contract, that's double what Michael just said, right? You can go to 50s. That's extremely safe. And Tesla has wild moves, but $30. But the big thing is so if you're using the wheel for Tesla, now would be the time where I would be deploying puts because Tesla's gotten destroyed. I'd be deploying covered puts. Covered calls right now is down bad as Tesla is. No, negative. That not for me.
He's just lazy.
You wouldn't
You
have the
don't
capital
wanna-
to come first.
You don't want to take the time and learn this shit. And I'm like, man, your money's just depleting over there.
So-
as it
so
goes
Sa-
down.
Savage, I had a
It's
conversation.
just sit there like a putz. He's lost like 100,000 on it already. You know.
I had a conversation with House last night. House is a buddy of mine. He's new here. And I'm not going to go into too much detail, but one of the things that we talked about is
I'm a good head talker.
people who complain about their issues and do nothing to fix it.
Yeah.
They complain and complain and complain and complain about all the stuff that's going wrong in their life and why they're, depressed and why they're upset. And you know what? If I was doing exactly what you just articulated to me, I would be depressed too. I'd be miserable because that sounds like it sucks. And it sounds like it's your choice. So, and if somebody's talking to me about issues that are not correlated to what they're doing on a daily basis, things they couldn't control, I get that, right? I understand that. If you can't control it and something happened to you, I understand. But, if you're going to sit and complain all damn day about crap that you have the ability to change and fix in your life, then you have no sympathy for me. All right, that's going to be it.